Hello and welcome to this video. Now this video is the pre-video before we do the webinar, and the reason for that is I want to cover off some of the key ideas of the content in this video so that the actual webinar we can answer your questions and I can focus more on the specific offer that we're going to talk about. So in this video I want to talk about three key areas. I'm going to talk about the three circles on the front of this book, so impact, alpha, and liquidity, and how that relates to you. I'm also going to talk about the three value drivers behind MBH, which is really, really important if you're thinking about investing. I'm going to touch on Teledyne, which is a company that has taken one element of what we do, or took one element of what we do at MBH, and I'm going to show you how that worked very successfully. And I'm also going to let you know about another company which has been doing a very similar approach to us and how they've succeeded. And I'm going to go into more depth of that on the webinar itself. So on the webinar, I'm going to talk about an opportunity for you to invest in MBH, and a very specific opportunity that will allow you to do it in a risk-free manner. And I'll explain on the webinar, I'll explain how that happens. I'll explain why we're prepared to do that. And exactly what it means for you. But before I get into that, I do want to cover these three key areas of the sort of investing principles that guide a lot of what we do. And they're covered in more depth in this book, Entrepreneurial Investing. Your investment decisions are being driven by a specific drive. And so there's three areas that ours come into. So I want to start with impact. So when we're talking about impact, we're talking about the ability of your investment capital to have a positive impact on another business. Now at MBH, what we're really focused on is around job creation and small business job creation. Second thing to look at is around alpha. Now obviously impact is great, but you want to be getting good returns, and ideally you want to be getting market beating returns. Now in Wall Street, they refer to this as alpha. What is the alpha that you're getting from your investment capital? And I'm going to explain to you on the webinar about how we aim to outperform the market year on year through adding in the fundamentals of what we do. And then the third circle is liquidity. And again, I'm not going into these in any depth. You'll get sent a copy of the book if you haven't got it already. But liquidity is very key issue for me as an investor. It's something that determines a lot of the investment decisions that I make. Interestingly, you can kind of look at liquidity very much is determined by your time horizon. So traders do want to get out in seconds, minutes, hours, and so that's how they consider the time frames. And so when they go into a stock, they need to know that there's going to be buyers that will get them out of the stock whenever they're ready. If you're looking at a real estate investor for example, they might be looking at a much longer term horizon. It might be a 25-year project or even longer. But typically, if you're in the investment space that we tend to play at, you're kind of looking at months, years, and ideally less than a decade. A lot of private equity, a lot of venture capital is now a decade or more, and that's because they can't get the exits. So we want to explore that liquidity. So those are three key drivers: impact, alpha, and liquidity. And it's important to know why those three are important and why they're important to you, and which is your preference. What's driving your investment decisions? If it's purely alpha, there's nothing wrong with that, but acknowledge that is the driver and look for deals that fit that. The other three things I want to touch on in this video is around the three value drivers of MBH. And this is a conversation that I have with investors on a daily basis: is what is driving the value of the share price over the long term? So we bring it down to three things: accretive acquisitions, organic growth, and synergies. So let's touch on those in turn. Accretive acquisitions. Accretive acquisitions basically means that we're not doing any deals, we're not bringing any companies into the group that will dilute the value for existing shareholders. Now, of course, when we issue new stock to do a deal, that will dilute shareholders from a percentage terms, but we will only ever do that by paying a lower multiple than the multiple that we're trading at. And by doing so, the value per share or the earnings per share increases with every acquisition that we do. Now, this is a slightly counterintuitive idea, especially if you come from a small business background where any increase in stock dilutes you. If you are interested in knowing more about this, I'm going to include some links below anyway, but there's a video below that is a short primer on how accretive acquisitions work. But it's the primary driver of how we grow the value of our business over time. The second driver is organic growth, and that is we believe that a small business is able to grow faster as part of a group like ours than it would do on its own. And there's a couple of reasons for that. Firstly, a procurement best practice is never to give big contracts to small companies. And so a small company that sits within the MBH holding group can leverage off the balance sheet of MBH to win much bigger contracts. And we've seen that happen time and time again. In fact, in our first year of listing, the companies that were in the group grew organically 19% on average. Now, COVID will obviously has an impact on companies, but over time we do genuinely believe, and we are seeing, that companies are able to win bigger contracts because they're part of this group. The third one is synergies. Now, interestingly enough, synergies is the one that most investors focus on, and that's because a lot of M&A textbooks and a lot of M&A literature focus on the synergies between merging two companies. Now, the thing about synergies is they look fantastic in textbooks. It makes so much sense to take a company with a great product and a company with a great distribution channel, put them together, and everything looks rosy. The reality is that when you take businesses with different cultures and different systems and different priorities and you try and merge them together, it causes what's known as M&A indigestion. And so we get away from that by allowing each of the companies to operate independently. Yet these are all smart entrepreneurs and they're surrounded by other smart entrepreneurs. So actually there's a ton of synergies and a ton of sharing of best practice that happens between the companies in the group. But the difference is we don't mandate it from the top down. We allow it to happen organically between the companies themselves, and that's been incredibly effective. Where you can see this most effectively is where companies do tactical acquisitions, and you'll see already a number of the companies in our group are starting to do tactical acquisitions. So those are the three drivers of value: accretive acquisitions, organic growth, and synergies. And the question for you as an investor is, do you believe that over time MBH will continue to be able to do accretive acquisitions? Will they continue to be able to help organic growth of the companies in the group? And will those synergies start to grow? And just my personal view on it is absolutely we'll continue to be able to do accretive acquisitions. We have our own bonds, which we can also use regardless of what the share price is doing. And there's a huge demand. We get more than 1,000 applications a year from companies that want to join us. So I don't think that's going to slow down anytime soon. Secondly is organic growth. I don't think that's going to slow down anytime soon either. I think not only will the companies in the group have a bigger and bigger balance sheet, which will give a lot more confidence and comfort to clients in hiring them, but also moving into the second and into the third area of the synergies, the more companies we have in the group, the more opportunities there are to cross-sell, to share best practice, to share resources. And so I think those three areas will continue to grow, and actually it should become more of an exponential growth. And what I mean by that is the more companies we have in the group, the more companies are attracted to join the group. And the more companies are attracted to join the group, the more opportunities there are for all companies in the group. Now, finally, I just want to touch on Teledyne. Now, some of you may have seen me present about this company before. I really like this company. They listed back in the 60s, and I'm not going to go into huge depth. If you want to know more, there'll be links below. But what they did very, very successfully was they used their own high-priced stock to buy lower-priced companies, or to buy companies at a lower multiple. So very much this accretive acquisitions approach that we did. Now, they were incredibly successful. If you were an investor in them, you would have significantly outperformed the S&P 500. not just over 10 years, not just over 20 years. Teledyne is still going strong today. It's merged its various variations, but as a concept, it's still working very well. And another example that I'll talk about on the webinar is a company out of Canada, actually, which has been doing a very similar model to us. It has about a 20-30 year track record. And I'm going to touch on them and what's happened to their shareholders over the last 30 years. But I'll give you a primer. Their share prices increased at a higher rate than Amazon. So it's quite an interesting story, and I love the way they've done what they do. So those are the three key bits of content. Now, what I want you to have a think about before the webinar is, what are you looking for as an investor, and what are the questions that you would need to have answered to make you feel comfortable about this investment. And then of course I'm going to talk about how we're actually going to guarantee your investment and make sure it's a no risk opportunity for you. It's all upside, and I'm going to explain how we do that. I'm going to explain what the limitations are, why we can obviously not throw that open to everyone. We only do it with a certain small amount of investors. But hopefully it will be right for you. We would love to have you on the journey. 2020 was a fantastic year for MBH. We grew incredibly well. We added 12 great companies to the group. And 2021 is shaping up to be another very, very exciting year for us. So have a look at the links below if you want any further information. Do please answer the questions below and fill in your details. And once you've done that, you'll be sent all of the login information for the webinar. And I look forward to speaking to you on that webinar.